Welcome to Trading Nation. I'm Mike Santoli. The Dow Jones Industrial Average just a couple hundred points away from its record high, but a dozen Dow components aren't out of the woods just yet. Check out the 12 blue chip stocks still down double digits. Names like Intel, 3M, Goldman Sachs, newly minted Dow stock Walgreens Boots Alliance, and several more are all off more than 10% or more from their 52-week highs. So our question here today, are any poised to make a comeback? Stacey Gilbert is with Susquehanna. Michael Bapis is with Vios Advisors at Rockefeller Capital Management with their picks. Welcome to both of you. Stacey, interested to hear what you have here to say about Intel. Semiconductor stocks have kind of backed off quite a bit. Intel's underperformed the group. So what do you like here?
Yeah, we do continue to like Intel. As you mentioned, Mike, it's underperformed. It's really struggled to bring its 10 nanometer technology to market. And particularly compared to peers like AMD that have really seen just comparatively huge returns this year relative to Intel's underperformance. We do continue to like the name. Chris Rowland is our semiconductor analyst who covers Intel with a positive rating and a $58 price target. A couple of points that I would highlight that Chris has mentioned in his notes. One, the data centers continue to be a very profitable area for Intel. Two, if you were to look at just a complete solution set, that's Intel. It's got your connectivity, it has your storage, it has your networking. Pretty much Intel is kind of a go-to shop, and they've done a good job diversifying more recently with Internet of Things and autonomous driving. So from that perspective, we do still like the story here. From an options perspective, I would say that the flow continues to be what would I call it? Yeah, it's a little bit bullish here. It's not pound the table bullish. It's not, hey, you're going to miss out kind of bullish, but it's I'd rather own this than not own this is the type of flow that we've been seeing. And from that perspective, I would say investors who are interested in owning Intel, but maybe are concerned about downside or don't want to fork over the amount of money necessary in order to buy the stock outright, they could look to using call options. The volatility levels of Intel options are not incredibly high, which makes them an attractive risk reward for investors who want that upside exposure with limited downside risk.
Yeah, not quite as whippy a stock as some of the other chip stocks are. Thanks, Stacey. So, Michael, Michael, the Walgreens Boots Alliance, a pretty conservative name, relatively new to the Dow, and you like Dow DuPont as well. So start with Walgreens.
Yeah, look, I think they've gotten beaten up so badly because of this whole Amazon stay-at-home economy craze, if you will. And so people just forgot about a company like Walgreens. If you look at their fundamentals, they're trading, they had 2.5 times same-store sales growth this year. They're trading at a 10-time PE, and their growth rate is close to 10%. So if you look at those three numbers, also getting a dividend yield of 2.5% roughly, that's a name we would buy as a deep value play. And within this economy, when there's so much talk around other technology names, we look to these deep value plays where you can get a nice growth rate and people really don't even realize.
And then, of course, you have the healthcare exposure within there, too. Dow DuPont, a lot going on with this company. It's going to be kind of a corporate split happening. What do you like there?
Yeah, look, it's a little bit different. We think that there's going to be more value realized after they split it into the 3 different business divisions. And this is more of a play on people aren't realizing the value of the merger yet, but they will realize it in the future. You have a big commitment from management to do it. You have a manager who did it at Tyco and knows how to break up divisions within the firm. And you also have 3 really, really positive business divisions that will come out of this. So it's a little bit different of a play. It's more looking at the future where we think the valuations are low now and they will be much higher in the future.
All right. So we got a tech, a consumer staples, and a little bit of an industrial special situations play. Guys, thanks very much for your time today, Michael and Stacey. Appreciate it. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.